We got some great news for SoFi stock investors regarding its success across its myriad of products. That's what I wanted to discuss in this video, the progress SoFi made across all its product categories and the growth across those product categories, and why that's great news for SoFi stock investors. Let's get started. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. SoFi management saying that because we offer products across 8 categories compared to many fintechs that only offer 1 or 2, the magnitude of our innovation is not always obvious. So SoFi management saying that we've been creating and innovating so frequently that it sometimes gets underestimated because we're going from 20 products to 24 products. And even though we're offering 4 entirely new products, that it gets underestimated because we already have 20, while other fintechs might only have 1 or 2 products. And so when they introduce a third product or when they introduce a second product, it gets a lot of attention and it gets a lot of news and the company gets a lot of credit for innovating. SoFi suggesting that you got to pay closer attention to us to notice how much and how frequently we're innovating. SoFi Plus reached 1 million members, and if you don't already know, SoFi Plus is their premium membership tier, available to those who enable direct deposit. So you can open up an account with SoFi, but without connecting it to your direct deposit, and in that way you won't get as many benefits. SoFi wants you to connect your deposit to have a direct deposit with SoFi, because if you have a direct deposit, that makes it more likely that SoFi will be your primary bank. Most folks, their primary bank is the one that they have the direct deposit on, because that's where your paycheck is coming in. And so if your paycheck is coming in there, that's the one you're probably using for paying bills and using and spending money on things. So SoFi wants to be that primary bank. So it offers people more incentives to connect their direct deposit with SoFi. And one of the benefits they offer is their highest APY on banking balances, which today is 4.6%. That's a reasonable return on investment for leaving your money in a bank account. That's almost zero risk for folks and 4.6% return. That's an attractive incentive, and that's one reason why SoFi Plus has achieved 1 million members. They also include 2 times reward points, up to 3.3% cashback rewards on SoFi credit spending, and discounts on personal loan rates, and much more. And in my opinion, the suite of offerings for SoFi from SoFi to customers is working. It's working. When you see 1 million members and you see the members growing and using more than just one product, their strategy so far is working quite well. The strategy of having an online presence only and not having brick and mortar locations, and instead using those funds to offer these incentives to customers is working, right? Having a 4.6% return on investment in your checking account or savings account is a much more attractive feature than having a physical bank down the street or a couple of streets down, because people nowadays rarely go in to a physical branch to do their banking. Most banking is conducted digitally nowadays, and so those brick and mortar branches are becoming less and less valuable, and that's working in SoFi's favor. So in small and medium business, members can now apply for a loan at SoFi and get approved offers from lending partners. This is important in that SoFi themselves are not taking on the risk for these loans. They're just referring these customers to third-party lenders. And SoFi, of course, generates a fee and revenue and profit from this transaction. And that's important for SoFi because their balance sheet is getting a little bit risky. And so this strategy for small and medium business reduces the risk while increasing revenue and profit. In home loans, however, they can now close their own home equity products instead of brokering them out, and this dramatically increases our potential for revenue per loan. And these are contradicting strategies. For medium and small business, they're outsourcing the loans. And for home loans, they're bringing it in-house. But I like this strategy because for home loans, you have significant equity, you have significant collateral, and it's not as risky as a small or medium business loan where there is oftentimes no collateral. And with home loans, if the customer defaults on the home loan, you can foreclose on the home and recoup some of your losses, and in some cases, not have any loss even though your customer defaults. With the small and medium business, it's highly unlikely that you can recoup your funds when your customer defaults. And so in that way, going after home loans, bringing those in-house and outsourcing the more risky, you're lowering the risk profile of your lending portfolio, of your balance sheet, which for SoFi is already pretty risky, right? They have tens of billions of dollars in personal loans outstanding, which are the riskier type of loans. And so going after home loans adds some collateral to the lending portfolio, and then outsourcing small and medium business loans reduces the risk. So I like this strategy here. The financial services segment was up 80% and generated $176 million in revenue and a contribution profit of $55 million compared to the same quarter last year where it generated a loss of $4 million. So that's great news for SoFi stock investors that the financial services segment is now generating profit for the company overall rather than being a drag on the company. SoFi Money achieved new records this quarter with deposits rising to $23 billion. Consumer deposits were up $2.2 billion from the previous quarter, and they opened 419,000 new accounts. And that's great news as well because remember the scare we had when people were going to larger banks because they were afraid of the safety of their deposits, and deposits were moving to larger banks like Bank of America and JP Morgan Chase. That was a bit of a scary moment for SoFi, but they weathered it really well. They didn't lose deposits. Customers stuck with them. They didn't lose faith, and that was great news for SoFi. And the last thing I'll talk about is not really great, but it's good that it's going on track, right? Their credit card and invest businesses remain in investment mode with nearly $100 million in annualized losses. But SoFi expects this to follow a similar path to its money account, its money segment, in achieving variable profit and contribution profit. So this segment of the business, the credit card and invest business, are a big drag on the company with nearly $100 million in annualized losses. But the rest of the business is thriving and doing extremely well, and the company overall has posted 3 consecutive quarters of profitability on the bottom line, despite investing in this new business, which in the long term is expected to be very profitable. Otherwise, SoFi would not be investing to grow this business. So overall, the second quarter was excellent for SoFi, and that is great news for SoFi stock investors. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.